Joining us is Greg Branch, Managing Partner, Veritas Financial, Joanne Feeney, Partner and Portfolio Manager at Advisors Capital Management. Greg, I'll just start with you. It could be the worst week since June. It was a little bit of selling. We heard some stuff from the Fed about tapering. We had some bad retail sales numbers, and we lost a war. So what do you think are the most important features of this week for next week?
I think the most important features point to what we're going to hear at Jackson Hole. We saw those Fed notes, and those Fed notes all but admitted what we've been talking about for a few months now, is that it's hard to make a coherent argument at this point that the labor market needs additional help. We just saw a pandemic low in jobless claims numbers at 348,000. That's following pandemic low numbers on August 5th and 12th as well, in the mid-threes as well. We just saw the economy create 1 million jobs last month, about 1.9 million over the last 2 months, and now available jobs outstrips by far the available workers willing to supply labor. We have 10.1 million openings and about 8.7 million people looking for work. And so it's hard to make a coherent argument at this point that the labor market needs accommodative monetary policy to nurse it back to health. On the other hand, I think we can make an argument that the Fed needs to turn its attention to inflation. And of course, we saw growth abate a little bit. We saw 50 bips on CPI this month as opposed to the 90 and 74 we were seeing in the prior months. But as you know, Joe, my thesis is that the supply chains aren't going to bounce back in the way that the Fed had hoped to fulfill that transitory label that they had been putting on these inflationary pressures. Our supplier and our trading partner countries are not nearly as advanced on the vaccination curve as we are. Taiwan is at 3% fully vaccinated. And so closures there will keep our supply chains somewhat fractured for longer than the Fed anticipated.
To Joanne. And Joanne, we're a business channel. We cover business, but some of the events that did happen, some of the heartbreaking events for veterans and for all Americans that we saw play out this week, which obviously inundated the airwaves. Does that hurt market sentiment? There were some people that thought the market might be down even more on the events in Afghanistan. And does it, in your view, does it change the calculus for whether the Biden administration can get everything it wants to get done?
Yeah, Joe, that's always tough to call the way politics are going to go. I think they're separate issues, though. I think there's certainly a great deal of support for the bipartisan infrastructure plan, and I really don't see the challenges in Afghanistan derailing that focus among both Republican and Democratic lawmakers. So I don't think so. But I do think that any time you get an explosion in geopolitical instability, it does roil the markets. It just reminds folks that there are a lot of other sources of uncertainty out there besides COVID, besides inflation concerns. And I think, that tends to make people pull back a little bit on the risks they're taking. And I think Greg is right. I don't think a lot of folks are looking towards next week's Jackson Hole meeting and what might come out of that. And I think people, though, are fundamentally misunderstanding the nature of this recovery.